Pickleonia.
Jesus fucking Christ, that's way too long. I like it. It gave me enough time to make a coffee, come back, and watch like 3 more segments. Hey, everyone. Thanks, guys. I appreciate it. Thank you all for all the birthday wishes. It was very nice. GM. Oh, good morning. Well, I hope you guys enjoyed the member stream. I'll see you all bright and early tomorrow morning before market open. Thanks, guys. I'm just kidding. Thanks, dude. Fragged again. I mean, for 2 days only, the DD is done because we need to wait and see what happens. But then it starts again. I'm super fucking excited for this Tuesday. Like this, well, this T plus two. Let's say this T plus two. Because if we're right about the reasons they use XRT and reg show, then we're gonna be a lot better at timing OPEXs in the future, even if they're offset or they move shit around. More excited for GME or Upstart? I'm pretty excited for both. I'm a little more leveraged on Upstart than I am GME right now for options, but both of them look really good. FOMO on GME's picking up pretty hard, so that's exciting. Fubo gonna no packs? I mean, if the rest of the basket runs, Fubo probably will too to some degree. I don't know how much it's gonna run. I mean, Gamma Max is pretty decent on Fubo, I think. It's like, I mean, it would represent a huge amount of gains for people that have been buying at like $3, obviously, but let me see. It's not bringing it up for some reason. Fubo. Yeah, Fubo looks really good. I don't know what Gamma Max is. It kind of disappeared a few days ago. But roughly like 750. Gamma Max seems to float between like $7 and like on the high end like 9, but the $9 one's pretty rare. I would definitely say that there's some bullishness though. So I think it's got a pretty good chance to run, but if it doesn't, it doesn't, right? I'm, I'm willing to wait. JFresh charts and DD last night looking real spicy. Yeah, they are. It looks like an Opex. I mean, I don't know how big it's gonna be. Like there's some things we don't know, right? Like is it gonna be as big as May? Is it gonna be as big as March? Is it gonna be somewhere in between? We'll know every day, right? We'll have our Gamma Max updates in the morning, and then hopefully we'll have some idea of kind of the peak potential prices. Happy birthday, Big Pickle. Happy belated birthday, Big Pickle. It's still a poor, so using free member chat, but I'm getting better at this stock thing thanks to you. Thanks, Not So Zen. Also, we kind of followed F-Man this year if we look away from March. Yeah, March was weird, but the rest of them were right on time. Let's 10x, yeah, should make the composite man square. Make us the composite man square. We're just the composite man. The poors are allowed in today, but I'm not gonna let them talk. That would muddy the conversation. So nice of Cohen to make books super stonk can understand. Is Ginger Balls coming onto the stream to discuss his DD? I hope not. So there's nothing more that JFresh loves than attention. And if you don't give him too much attention, he'll do more work. So it's best to rein in any kind of adoration, and really, really just parcel it out when necessary. Did you see the Bloomberg Opex article? No. Does this Opex in retrospect look better than May did? It's hard to say how much needs to be covered. I I would say it's probably equivalent to May. It may be a little bit more. You know what I'm excited about? I'm excited that XRT came off Reg Show on Friday. That's fucking awesome because that means that if they cash settled obligations last week, right, the FTDs are clear on the books. So that means that this week the ETF should be buying in, which is why, well, that's why we think they use XRT and like they put XRT on Reg Show in order to dodge the audit requirements from Standard & Poor and get onto the audit system. The SEC's very archaic ETF audit system. JFresh wrote a DD. Can I get a TLDR on it? He's super bullish. He's super bullish, but also nothing might happen. But also super bullish. Lenixis had the nerve to call our kitty out. I really don't have a response for that. I wrote a DD. TLDR, exact opposite of JFresh. So, hold on. So not bearish, but something's definitely going to happen. Okay, I like that. So the same thing we've been saying for the last month, why write it? Just additional confirmation. He added some data points that we don't look at very often, so, and those are lining up, so that looks cool. Lenixis says it's a Opex. What does he know anyway? I mean, when has he been right? November 2nd, nothing. October 2nd, nothing. September 2nd, nothing. You mentioned bots on your Upstart video, but I looked up the FTDs and it didn't have much. It was reg shared at one point. It's now much more in line. If it generates more FTDs, it'll be over the next week. It could get reg shared again this week, potentially. Depending on how much volatility Upstart experiences. It had quite a bit at one point though. Remember that an ETF should never have any failures. Zero should be the target number. Did you guys discard the put shedding on XRT as an indicator of GME price movement? No. I think that has an effect. I think they're using other ETFs now also, as the shareholding in other ETFs has increased since the split. So there is some more diversification of the ETFs they use to short GME. Like they use IJH pretty heavily now. So I did everything you taught us as patient, slowly enter positions, far out of the money first, closer in the money recently, with theta. Permission to buy weeklies now. You can do whatever you want, man. I mean, weeklies are still risky, especially this week, because the peak of the run may not be realized till, like November 30th, due to the T+2 delays, right? So, and the holiday. Gav can fuck off with that bearish nonsense. He's bullish just like we all are. He just can't let his bosses at Susquehanna know that he's bullish. Thanks, Byron. Are we gonna be seeing ups on the SPX this week? I think so. SPX looks pretty good. I would say that the rally probably found a low for the SLD period. And it looks like we're pretty much ready to move up. I mean, we had a 303 BPS drop, which is perfectly in line with like our conservative expectations. We may see a little slip like Monday morning as the rest of SLD completes, and we'll see what futures look like tonight in the Asian markets. But yeah, I think we're ready to start moving up again. A lot of the leverage is really good to the upside. So, and we closed out the week above the gamma flip point, which is important for the gamma exposure going into Monday. So yeah, I still think 4,000 is really reasonable. Maybe 4050. I will say that 4100, like this range, this upper trend line here. I'll zoom out so you can see it. Like this range still seems a little far off. We might hit it, but it could take a little while. Still not a lot of economic data this week, so not much to worry about. I think Wednesday we have the minutes from the November thing, but that shouldn't have like a big effect. We already know the decision, right? It would be interesting to see if JPOW came out super fucking hawkish, um inverse, the rest of the Fed president's dovishness. But Wednesday will tell. Is it likely they'll try to short down our Opex stocks beginning next week before they run? Yeah, Monday it's possible. We could see some shorting Monday. Um, maybe Tuesday. We shouldn't expect IV to crush too much though. He didn't write a DD. He's joking. Weeklies on Upstart are pretty cheap though. Yeah, they are. But okay, so we have T+2 right now. Right, hold on. So we have T+2 from now, which is gonna be Tuesday, or Tuesday, Wednesday, right? Let's go for the longest. So they could cover at latest Wednesday from Friday's T+2. So if they cover Wednesday morning, then it's gonna run up into the holiday, right? And then, Friday we have a half day. So there's only gonna be a small realization of price improvement on Friday. And then that could drag. So like if you look at GME, maybe this is a better example. If we go back to November 2020, which is this period right here. So this is November 2020, which is a bit different than November 21, right? November 21, we got rug pulled on the T+2, but we also ran into Friday, which we didn't this time. So, we didn't peak on this run until the morning of November 30th on Monday, right? With Thanksgiving being right here on the 26th. So we ran up pretty steadily what, Tuesday or Wednesday? Yeah, so Wednesday, and then Friday we went up a bit. And then the peak was realized here, right? So, yeah, it could drag out. So I'd be really careful with the expiration dates for the 25th. Those are a bit dangerous. Price target on Dole, is it still safe to buy near $10? I mean, sure, but maybe wait for a pullback. I don't think it's just gonna keep going up. It's eventually gonna pull back a little, right? I mean, my price target was here, like 6 to 750. I picked up shares right around here. Yeah, I realize it's done nothing but go up since like the original entry. Happy belated birthday! Thank you so much, NW. I appreciate it, man. But I think with a market downturn, we could probably get a pullback to like 950, maybe the 850 range. You know, maybe a target like this. But yeah, it's done really well. I realize that. it's up 43% from the original entry. Sorry. I wish there was more time to enter it. I think I nailed the timing on it. It was just brief. That's dull. But I don't think 850 for a pullback is out of the question. I'll probably pick up like another 5,000 shares at that level. Thanks, Bob P. Yeah, it was pretty good. Thank you guys. I ran 10 miles last night. Sounds like a problem. That's what Upstart going from 16 to 23 in the 2 days following earnings. Could that volume have been sufficient for any kind of pre-covering by the shorts? I don't think so. No. Especially because it went on Reg Show after that period. I would say it's even less likely it was pre-covering. What it might have been is Upstart using their share buyback, which they have quite a lot of money still in. I think they still have like 120, or as of earnings, they still had $120 million to buy back shares. And why wouldn't they buy back their shares at $13, right? If Upstart does run, what is a reasonable price target? Do you think it's reasonable for the high to be realized on the 30th as well? I think it's reasonable to consider that the high might take till the 30th as well. Yeah. Obviously the same pressures that continue Opex running apply to any stock that's running to a degree, especially if it has a lot of options. Because what keeps it running after the initial covering period, right? Here, let's look at some former GME Opex periods, so you can kind of see why it does that. This will make it a little easier to understand. Let's go to March. March was a really like technically good one. So this is the initial covering period, right? Where like all the volume is. And if I bring up the volume here, you should be able to see that. So yeah, see all the volume coming in on T+2, right? So like our big volume peak is here. Volume peaks there and then drops, peaks again, drops, peaks again, right? And so if you look at this, these are all T+2, right? This is T+2 from Opex. This is T+2 from the next peak. This is T+2 from the last peak, right? And so, as the price, as more options go in the money, they create more gamma exposure, which leads to more market maker hedging, which drives prices up and creates more FOMO, which leads to more gamma exposure. And the more FOMO you have, the more that this can keep dragging on, right? Epic Pen not working. What the fuck? There we go. I got it. Right, so all these volume peaks are T+2 apart. And this is where the MM hedge continues out past the initial covering period. So basically, all of these options go in the money, right? All these strikes on the initial run, and then T+2, the market maker has to hedge those strikes, right? So you get a T+2 break, and then volume spikes again. Sorry, I drew that in the wrong spot. Volume spikes again, right? And then we get another volume spike here. Is that backwards? I have that backwards there. Right, and so these are all your T+2 periods. And then eventually, on the last like T+2, you'll get like some big shorting, right? As they clear out the last of the obligations, start to leverage the downside. So yeah, if a lot of options go in the money Tuesday or Wednesday, that's gonna bleed over into the next period. And if a lot more options go in the money on the next period, that can bleed over again. Sometimes you don't have a lot of options. I think like August or March or last November are a good example of that. you know, where there is no bleed over because they ran this early, right? So most of the options that went in the money on Friday. Monday we continued up as covering continued, and then you know they blew out Gamma Max on Tuesday, and they were able to leverage the downside. So it really depends on how many options go in the money. It's a really important factor because the initial covering, like that buy-in that triggers all of this, is pretty short. It only lasts like a day. Like the ETF just takes the cash and they go and buy the shares. Would it make sense to sell half your in the money CCs on the first tap of GME, hold the other half hoping for T+2 on the 30th? Yeah, you could do that. I think it would depend on when we see them cover, right? So if we see them cover on Tuesday, you know, then the T+2 would happen on Friday. And then, you know, depending on how many options go in the money then, maybe more on Monday. You want to wait for the second peak to prep for the downside if the initial move is very large. So if a lot of call options go in the money, say we hit 32, 35 on the initial move up, then you know a lot of GME's call OI is going to be in the money at that point, right? Which is going to create a large amount of gamma exposure for the market maker, which means that you know then there will be follow up covering. It also depends on FOMO, like how many options we're seeing come in. Is retail buying a lot of options or institutions buying a lot of options? Because all of that stuff can raise gamma max. I prefer to wait until the second test. Even in last November when the options chain was really super weak, you know, we still got too high, like a higher high on the second test. Also, you're closer to the point where gamma breaks down and the hedge flips, right? So, um, you're taking less risk of your option being in the money for a long period of time. Opex Pop would be nice. The slapdicks over at Ford Motor Company finally scheduled my Bronco for production after 2 years of waiting. Jesus. I would have just bought a different car. What the fuck was that? Okay. Um any thoughts on the MMTLP run up? I don't know. It's worth significantly more already than the oil they have. I think I responded to some guy in the Discord about this a while back who asked me why I was so bearish on MMTLP. But first of all, I didn't want to hold it for a fucking year. Like just sit there and bag hold it. Second of all, I think it's already worth significantly more than the value of the oil fields they have, which are roughly 2 to 300 million. I think they'll dilute it in order to get money to continue the operating costs, frankly. Yeah, I mean, if you want to buy at the peak into a potential dilution, good luck. Also, it's like a fucking OTC stock, and I don't care about it. Could J&W cause some problems with vol players in the basket? Earnings on the 22nd, and it's a 20% implied move from what I was reading. It could, yeah. I mean, a 20% implied move on JWN isn't huge. Nordstrom's part of the basket. It could put some pressure on it. Thanks, Notson. Do they really want people to talk about GameStop over the holiday? I mean, they might not care, right? Like, I still don't think the run ups are bad for them, right? Like they want the price of the stock to run up. Everything that happens during an OPEX benefits them, right? First and foremost. Otherwise, they wouldn't do it because we all ride the coattails, right? So if we're making money on it, assume that they're making way fucking more money on it, right? Yeah, Opex is good for them. It creates liquidity, and it increases implied volatility drastically. They need liquidity to short implied volatility, and they need implied volatility so they have something to short. So, everything that happens during the Opex period on a real Opex run benefits volatility sellers, right? You know who it hurts long-term stockholders. On pretty much every stock they do this on, besides GME, the price drops over time, right? Because you have these multiple peaks, right, on these OPEX periods where the stocks run, and this encourages long-term sellers, long-term holders to sell, right? Except on GME, it works a little bit differently because retail rapidly buys the bottom. So on GME, it goes like this, right? Because we're always buying the dips. We're not selling the peaks. So no sell, no sell up here, right? And then buy the dip here. So in that regard, GME is still unique to some degree. And that's why I like Upstart, because Upstart's actually, and Fubo as well, because they're actually good companies that institutions are buying because they have potential. Whereas a lot of these other stocks really don't. Could you go over timing for obligation due dates on Upstart? If we see a run on Reg Show this week, I'm not sure what you mean. If there's obligations due to their ETFs, they're due or have already been cash settled. They're either due in T+2 or they've already cash settled them. I'd say that they've probably already cash settled them. As far as all the puts closing, I mean, those are due in T+2. From a market standpoint, what are your thoughts on people selling out their losers for taking tax losses 31 days? We see a noticeable effect, usually at the end of the year, before like the tax harvest. It's like a day. It's like December 31st, usually, or something like that. DDS isn't going down either. Nice. If Upstart doesn't run this week, are you cutting all of your options this week? Yes. I mean, I'll probably keep my like 2024 volatility plays, but that's it. Could Upstart come off a reg show this week during Opex? Is that a likely possibility? I mean, yeah, their goal would be to try to get it off of reg show this week. The question is there enough, is it going to run hard enough that they need to use even more synthetic liquidity and create more fails and it stays on reg show, right? Because if it's able to stay on reg show through this period where they get liquidity, they don't have another chance to get liquidity in any meaningful way until December, right? Until the next Opex. So that means that if Upstart can stay on reg show through the liquidity generation period, then it goes, into a liquidity utilization period. And during the utilization period, it's very hard to get it off reg show, right? So yeah, if it can stay on through OPEX, that's bullish as fuck. Because that means even more obligations on the next OPEX, and then so on and so on until it goes boom. The fact that they knocked it off reg show and it went right back on like that is very, very bullish. It means that they're having a very hard time finding locates and they needed to cycle it on and off to dodge the forced locate requirements of reg show. and Rule 204. Cutting them profitably, too, I might add. Yeah, probably. How awesome would it be if Upstart bought the dip and reduced the free float by like 8 million? That'd be fucking great. Although I do really like their free float of 69.69 million. How awesome would it I would assume if we don't see an Upstart run, they probably drop it the week after with the rest of the market. No? I mean, I don't know if the market's going to drop the week after. That seems like a broad assumption. There's really no negative economic data right now. That's kind of the problem. That's why we keep moving up. And calls are still cheaper than puts. But if it runs, are you keeping them for a possible T+2 the following week? Depends on how hard it runs, right? Yeah, I mean, if we go above like 25 and there's shitloads of call options in the money, sure. If we don't, then like if we run up to like 24, then that means we'll probably only hit like 26 on the bounce. I'll probably take profits during the course of all of it because I have like 1,600 fucking contracts. I have no, I have like 2,000 contracts now because I bought more volatility ones last week. Jesus Christ. I'm a bit over leveraged. Hey Carl, if it stays on reg share during Opex, would you hold open your calls or reposition after Gamma Max? I'm definitely gonna reposition after Gamma Max. How's the possible market crash situation look? Still looks like we're gonna keep grinding up. We could grind all the way. We could keep grinding up into like the next earnings period, like the next big earnings period. I don't think that's out of the question. I mean, it keeps applying more and more pressure to short sellers, right? And so, obviously, that has a breaking point at some point. If we see another big like 700 basis point move up, I'd be very wary of the sustainability of that high. 24 is pretty weak if it's an Opex. Yeah, I agree. I think a break of Gamma Max is most likely. But they may try to control the run. I mean, I don't know how desperate their situation is internally. I know externally it looks really fucking bad though. So, assume that they're going to try to do everything in their power to stop it from running hard. At least the long shorts will. The vol shorts don't care if it runs. They want it to, but people who are actually short the stock really don't want the price to go up a lot, right? That's not good for them. Someone on Wall Street bets about 1.1 milli in calls and puts on Upstart and GME, like synthetic long. Are you getting any near the money calls for GME or sticking to 0.1, 0.3? 0.3 to 0.1? Yeah, probably. I don't really have any interest in buying them in the money because they really just don't make that much money when you do that. I never sold calls into this year, so selling CCs Wednesday at close is some of the easiest theta capture, correct? If so, are there any pointers to take full advantage? What do you mean? Like selling them this Wednesday at close? Because of the holiday and the half day? I mean, I guess so. I don't really know if there's anything to take full advantage of. Obviously, the higher IV is, the better it is for your call sales. Who do you think would have more power in Upstart, regular shorts, or the vol players? And the vol players have better control over the price. The regular shorts, I mean, there's not that many shares. There's only 1.7 million shares to borrow, and the borrow rate's still really high. So some of the shorts are trying to get out, which makes sense. What's the most bearish scenario for Upstart? Do you think they can get away without at least a modest run? No, I think they have to buy. It was on Reg Show for far too long this quarter, um, to not create any synthetic obligations, and then additionally, there are like long shorts on a lot of long shorts on Upstart, and you already see them starting to close. That's why we're seeing shares returned, right? That's bullish as fuck. We may not have even seen the effect of those shares being bought back or like repurchased yet, right? Don't forget that, like those shares that were returned Thursday and Friday, we haven't necessarily seen the effect in the on the lit exchange of those buybacks. But shorts are scared, right? They don't cover unless they're scared. So that's why I said the shares being returned was bullish. What's the next big earnings period that you mentioned the SPX can move up to? Quarter 4 earnings, the beginning of next year. What's the current gamma max for Upstart? Let me double check. I think I have it pulled up here somewhere. Upstart's current gamma max is $30. So we're really looking at a move to like 33 or 35 on Upstart, and I think that would be sufficient enough for it to stay on Reg Show. I think it's gonna fucking rip super hard, if I'm being perfectly honest. Call buying on it's been rocketing up for the last like 4 days. Bought call delta is really high. The prime lending rate is really high. We don't actually give a shit about the lending rate through like IBKR and stuff. That's more of a think of the lending rate we see through like IBKR and Fidelity as like an indicator of turnover in the pool. But the prime rate on Upstart is, or at least the estimated prime rate on Upstart is very, very high. The delta that market makers need to buy and the gamma, like both turning up a lot. So yeah, Upstart looks really, really fucking good. Also, we can see the puts coming in big time on Upstart. Yeah, it's not. I mean, they can't hide it at that point, right? Like, there's no hiding their positioning once they're on Reg Show. They're super exposed. It's really obvious to other market participants. Um, they're in. I can't. They're in a really fucking bad spot, right? They got too bullish on their bearishness, right? And they overcrowded the short, which is what led to the initial Reg Show listing of Upstart and bots simultaneously, right? And the volatility shorts keep shorting volatility, right? Which makes it really hard for the fucking long shorts to cover anything, right? Because all the synthetic obligations are being built up, so the long shorts can't get it off Reg Show. It's a very, very similar situation to what happened to Jamie in 2020, and every day that goes by, it becomes more similar. And now that it's picking up interest, like GME did, it's really, it's really fucking tempting, right? So if it runs even 60%, right? That means that 100 times more people are going to want to jump in on the next run, right? Like they're not going to want to miss it the next time it wants to run, and people will keep buying through the period, the lull in between, right? And that's going to just pressure everything even more. And if that keeps cycling up, that FOMO, then yeah, we could see not a repeat of Jan 2021, but something very similar, right? Like a big fucking move. If we don't see it now, I mean, this has probably more pressure on it than GME did in like mid-November last of 2020. And there's more institutional pressure too. There's a lot of institutions that are like bag holding Upstart at like $130. So don't think that they're going to do anything to prevent a short squeeze. Hey Greg, happy birthday. Thanks for the stream. No questions until after Opex runs its course. Thanks, guitar player. It's guitar stuff. Ready Player Dan. Do you see Fubo dropping below current prices in the event of a market downturn? Sure. Yeah, but it probably won't stay there long. If Upstart runs, are you going to sell CCs on your shares or just close your entire position and reposition for the next OPEX? I'll probably sell CCs on my shares. I'll keep the shares, sell deep in the money CCs. If they don't get assigned, then I'll retain the shareholding. Otherwise, I'll just reposition. As far as options go, we'll see how much it runs. If it runs, more than 100%, I might exercise or cashless exercise some stuff. Probably not a lot, but I'll cashless exercise some. What do you think the crazy price area for Upstart is if it gets out of hand? 40, 50? I mean, it depends on how much Gamma Max climbs, right? Remember, the more out of the money calls get bought, the more Gamma Max rises, right? So, and there's plenty of open strikes out of the money. That's another advantage maybe that Upstart has over GME in 2021. So as GME started to run in early January, it started to exceed its strikes like a couple days in a row, right? It went above all the available strikes on the chain, right? And so that kind of caps Gamma Max for the day, right? Because you can't buy anything more out of the money. But on Upstart, you don't have that problem. On Upstart, all those strikes are already open, right? They're open up to like $590, right? So people can keep just buying further and further and further out of the money as it runs. So like the amount of FOMO that can build and like it's the cheapness of it to build like tons of exposure on the chain is kind of awesome. And it's not just near dated calls that are open really high up the chain, right? It's like Jan 2024s have $590 strikes. So it can really fucking pick up some steam if people start buying out of the money calls. And the market maker gets caught trying to break that Gamma Max. How hard would Upstart have to run to make you more than GME did? I mean, I didn't have that many calls on GME in January of 2021. It'd have to run really hard to make me more money than like GME did in Feb of 2021. But for January, I mean, like I had like a $10,000 position in GME in Jan 2021. I bought more like once it started running, but not a lot more. Most of my money at the time was like tied up in Tesla like leaps. So I mean, I made money on those, but it tied up a lot of my capital. Also, like I wasn't like 100% in on GME in January. I all my profits that I made from January I put back into GME before Feb, and that's when I made a lot of money. How do you approach GME CCs when thinking about the double peak potential? And for us with a $40 cost basis, what strike would still be worth it? I mean, depending on how much it runs, say it runs to, and this is excessive, but say it runs to like 38, and Gamma Max is at like 33. That's a $5 drop in cost basis if you sell CCs at that strike. If the first test is 38 and say the second test is 42, right, and Gamma Max stays at 33 PM test, right? Then that's $9 a share that you can shave off. Plus volatility. Don't forget you're selling volatility premium on top of this, right? So you might get like $10 a share, which is huge if you want to keep your shares. Although, if I had a $40 cost basis and it ran to 42, I don't know, maybe I'd be greedier. On a macro level, do you see the next 5 to 10 years looking like stagflation environment like Japan in the 90s? Probably not. Um, I think once they start to pull back the RRP, we'll get a lot more movement in equities. I don't think we're gonna stagflate. I think they'll just keep raising rates until we start to see active drops in inflation. The U.S. isn't, we're not doing quantitative easing, so I don't think we're gonna end up like Japan. And if we continue to tighten through next year, I mean, we could hit a recession, but I don't think we're gonna like a long recession. But I don't think it's gonna be like Japan in the 90s. I do think the market will be afraid of valuations for some time, though, like really high, exorbitant valuations like we have now. If you had purchased 75% of your Upstart share position by always DCA down, would you consider buying the other 25% at the current price? I mean, I think the current price is very close to the actual value of the stock. I think Upstart's worth about 1850, 1875 valuation wise. Obviously, prices below that are very, very nice, but my cost basis on Upstart's like right around 1870. So, I mean, I don't think it's bad. Could you realize cheaper prices? Sure. They're likely to have worse earnings in the future. But this really, like, what's going on with Upstart right now isn't really reflective of their valuation at all. It's kind of a different situation. What if those institutions recall those shares? Oh, they would if they want to sell. Ozarius, welcome to Cornishon, man. Appreciate it, dude. Hit me up on the Discord. I'll get you added after the stream. Or wait, no, I won't. You don't have to do that. Do you think institutions would bail on an Opex run even that far underwater, potentially hindering a run? I mean, maybe smaller ones might. There's institutions that don't have super high cost bases. I mean, they need to have some holdings for their ETFs, right? And those holdings increase as the market cap increases. So I don't think that's something you need to worry about on a run to like $30. RC buying helped push GME over the edge and cause Gen 2021. Does the Upstart share buyback pose a similar tipping potential? Yeah, absolutely. If Upstart does run hard, do you see the institutional cost basis as a pretty tough wall to break since they might start selling? I mean, they're probably not going to sell at cost basis if they think the stock is running. I mean, do you not think that BlackRock can like model price performance potential? They know what they're doing. These people aren't idiots. I mean, you'll see if you start to see really high volume, stagnant peaks. Be careful. But I think that's a bit of worry over nothing. It's run harder and to much higher prices than we're targeting in the last 6 months, and they didn't sell. I don't see why they'd sell now. I hope the company's actually really good long term. Vanguard averaged their position down, um, which if they're doubling down on a stock, that's an awful lot of confidence, right? Uh, but Upstart makes a shitload of money when they're up and running, and if that's going to be 6 months out from now, right? Once the Fed starts pulling back rates and mortgage interest picks up again, they make like 55 cents of revenue for every dollar of sales. There was a reason they were worth so much last year. They didn't like short squeeze after their IPO to $400, right? They were making like their initial earnings reports were phenomenal. So, you know, Upstart at 20 now, you know, in the current environment, yeah, it's unfortunately what it's worth, but in an environment where, you know, the loan industry is heating up, and, you know, they can participate in more and more underwritings, uh, they're going to make a fuck ton of money. So it's, you know, it's a long play too. It's longer than I want to be in it for, but there's millions of people chomping at the bit to buy houses at the bottom of the housing market when interest rates start to turn around. Housing prices are already starting to drop pretty drastically. Those buying calls make them buy. They need to push the gamma to the point. So as the price keeps rising, gamma keeps expanding, and as gamma expands, it becomes harder and harder to hedge, right? And so, you know, the as gamma max moves up, they need gamma to collapse to reposition their hedge. Otherwise they get stuck in a cycle where they're buying into the upside. And even if they buy puts, like you can't hedge calls with just puts. You still need to buy shares. Any news on yen Nikkei squeeze? I mean, the Nikkei would be going down, the yen would be going up. Yen's been rising. My position's profitable. I'm using like forex futures, like FX futures. I have some ETF exposure. I have some like bear Nikkei ETF exposure. Um, that's about it. But my exposure is out through June of next year. So it's pretty long dated. I'm prepared to roll it like going into Jan or Feb, and reposition. Um, I'm gonna keep it open for a while, I think. So far the position's been profitable though, especially with the Japan buying back bonds against and kind of directly influencing the FX market. Like the yen is starting to rise, and it's still massively overshorted, right? So, um, you know, the chance for yen to squeeze is still, I think, very much there. It's a long play though. There's a lot of factors, and you know, quantitative easing kind of slows down the time horizon. One thing I've noticed you watching you trade SPX is you're not afraid to re-enter a position. With Upstart, I feel like we should full port, but I know that isn't really smart. Can you speak to this? Um, I mean, you just have to be a big part of trading is like confidence. Even when you're wrong, you know, that I guess that part's hard. I don't really care if I lose the money, right? I understand risk reward pretty well, so I know I mean it may not look like I'm afraid, but it's just I'm just analytical about it. I don't risk more than I can afford to lose. You know, I position so I can turn around losses. A really good example is last week is like I lost like 12K on zero DTEs, right? But then I just positioned the other half of the account for the drop, right? And then made like 14K back. So it's just, you know, you gotta understand what's going to happen, I guess. The more you participate in the market, the more you're gonna feel comfortable doing that. I think it's just a time thing. It's hard to speak to each individual's psychology. 37% of realtors missed a rent payment last month compared to 20% the month before. Nice. So for the market makers, it benefits them to chase down Gamma Max earlier rather than later to stop FOMO from lifting Gamma Max up. I mean, potentially the market maker shouldn't care, right? They're making money off the spread, and the spreads get crazier, right? The more the stock runs. So theoretically, they shouldn't give a shit. Gamma is very difficult to hedge for a market maker because of the way it expands, especially as contracts approach expiration, right? So I would say that Gamma presents one of the greater risks for market makers, but theoretically they should be hedged, right? And the hedging is all we care about. What's Upstart rip super hard precious? What? Do you think small IV spike going to GME earnings worth capturing CCs on, or just target the 12.9 date on Opex? 12.2 seems such a short time for an Opex covered call. I mean, you don't really care about how long you have till expiration if you're selling them in the money. Like the theta is not going to be that much different between the two. If you're selling them out of the money, then the theta could be more valuable. But yeah, probably like 12.9. We don't know when earnings is going to be yet. They haven't announced it. Maybe they will in the next few days. I mean, if I saw a fucking November 25th on Wednesday, say Wednesday we hit $36 on GME, and I saw a November 25th, right, like 32 dollars strike, right? I'll still get $3. I wouldn't sell that because it's not enough time for the price to drop. But I'm just saying, like, I'll get $3 for that, the same as I'll get $3 for December 2nd, right? The only difference will be the theta, which isn't going to be that much. Do you think they'll start covering on Monday? Maybe. It's possible. I think we started to see like big movement on XRT on Tuesday or Thursday. So yeah, it's possible. If they run it hard Monday, then they can break the gamma on Tuesday or Wednesday, which would bring us down into the holiday, and then they can short into Friday on the half day. So something to consider. For those of us with higher cost basis, $40, and just projecting past dynamics, would it still be profitable to sell covered calls? I mean, yes. Uh, You could sell them further out, but earnings is a risk because of how close GME is to positive EPS. I don't think there's anything wrong with selling covered calls and just keeping your position, but you'll have to wait for another OPEX to really bring your cost basis down significantly again. You might be able to bleed off like a couple bucks in between OPEX periods, but you'll need another big OPEX to shave off another chunk of your cost basis. I like let me put it this way: my cost basis on GME in like January of this year was like 36, I think. 36, 37. So I've shaved down almost $30 over the course of this year. You just have to be, patient and risk averse. But it can be done. You can bring the cost basis. Not post split. That's the pre-split cost basis. I don't know if it was post split. But in like March, I sold covered calls that were $25 in the money. So it depends on how hard we run, right? And then we split that. But it's a happy belated birthday present. Oh shit, sorry. Early Opex day present. Hopefully this $3 is a minimum 1/10,000 of the profits I and everyone else will be making. Thanks, my man. PS loving the haircut. Thanks, Tankerific. When do we know if Upstart completed the share buyback? With the safe harbor regulations, I don't think they have to report shit until their next earnings. I don't know if JFresh is around. He hasn't like DM'd me or anything. Possible the Upstart jumps to 30 and just kind of stays elevated until December Opex. That's possible. That's fucking super bullish. I mean, at that point, I would shed my out of the money positions on the IV spike, keep my in the money positions for January, and then I would buy more out of the money positions with the profits, right? Well, PT would be a hard run for Upstart, like 35. 35 would be crazy. Above that is just nuts. Thanks, Brendan Ellis Fun Adventures. You're looking forward to saying I'm not a centaur on the house floor. You say we see bullish positioning and call volume coming out on Upstart lately. Do you see that reflected in the increase of call OI? I see it reflected in the increase of bot calls. Bot to open. Bot calls and sold puts, specifically. What advice do you have for those of us traveling for the holiday if the run happens on Wednesday? Trailing stops, auto sell points. Yeah, I mean, that's all you can really do to manage your position, right? Try to pay as much attention as you can throughout the day and adjust as needed, but you can't do a lot if you can't watch. Like trading options during Opex when you can't be there is probably not a great idea. It'll be hard to capitalize efficiently on it. But I understand people have lives. Fidelity has some really customizable like auto execute orders and stuff like that, so you can like sell covered calls if it hits like target price of X. Yeah, conditional orders. I can't remember what they call it. It's called like iron something or some shit. I lost money on June Opex because of traveling. Set stops. Yeah, I mean, stops are important. Trade armor. That's what it is. Thank you. But I mean, if you can learn how to use it, I've never fucked with it much, but I generally just sell my covered calls. I don't have any like conditional orders set. So I lost money in June Opex and I wasn't traveling. It's fair. When would be best to see bots on Reg Show again? Before this Wednesday, or by next Monday, it would be best. We would expect XRT to be on Reg Show again in December, most likely. December Opex. At some point, right? I think September we got fucked with a little bit, but yeah, sometime between the December expiration on the 16th and the T+2 period. What was birthday dinner? I had a Chateaubriand with a brandy glaze and a I can't remember the kind of cheese. It was some sort of, I think it was gorgonzola, like cream sauce. Portobello mushroom, roasted portobello mushroom, and like hand-picked crab meat or lobster meat over the top. It was good. Some like garlic mashed potatoes, grilled asparagus, stuffed mushrooms. Amazing. I got pretty fucked up last night. If there is a run during this Opex, we basically can't rely on technical analysis. Is that correct? I mean, intraday you can use it, but it's less useful. You need Active Trader Pro desktop app for Trade Armor. I mean, everyone should be using that anyway. I don't know why people are trading on their phones, or I mean, I get it if you have work and stuff, but if if you don't, you should always be using like your broker's desktop app. I missed the Bobby rise because I was on a cruise and couldn't exit. Yeah, I mean, this is why I don't go on vacation or do things. Is the options chain on SPX looks bullish for the next couple of weeks. Suggest we can keep going up to test the bear market trend line until December, or we may just stay in range between 390 400. I think we could hit the trend. As long as we continue to have not negative news economically, I don't see any reason we can't hit like the 4100 range over a few weeks. I don't know if we'll hit it this week. We could. Um, we'll see where positioning falls now that SLD is over. We're going to start to see a lot more leveraged, long dated positioning on SPX after Friday, well, into this week. Did you sell your hat? No. Chateau Oscar style, kind of, but with lobster. It was fucking super good. My dinner last night was shredded cheese out of a bag, eaten over the kitchen sink. ATP app for Mac is absolute dog shit. It's pretty dog shit on PC too, but get a PC. Did you see that thread in the DD non-GME section posted yesterday correlating SOFR spread blowing up and predicting the bottoms of major market downturns? It sounds interesting. I didn't, but that makes sense. Do you think they could drop IV again before a run to shake people? Or if they do, that is it? OPEX over. They could try to drop IV before a run. I don't think it's going to shake people, though. No, I mean, you're not really going to, like I said last week, currently with the liquidity where it is right now, there's no dropping things. The pressure is already on. If you're not confident in your position, don't enter one. Seriously, like so many questions are what ifs. Listen, this is how it goes. You get exposure. If something happens, you make a shitload of money. If it doesn't, you lose a little bit of money. There's really not that much to worry about or be concerned with. If you're over leveraged, you shouldn't be. And believe me, if you're asking questions like that, you're probably over leveraged and you probably shouldn't be. You never answered if you went out with the cat lady last night, so I'm assuming you did. No, I didn't. I didn't go out with the cat lady. GME premiums are quite good these days for CSPs. Yeah, I sold some last week. They expired on Friday. I did okay on them. What's your opinion on using IBKR and the TradingView software for trading? That's fine. I'd prefer to use like TC2000 or uh Trader Workstation. I don't really think you need to incorporate it into TradingView. It just creates lag in your orders. So, but it's up to you. And if it makes you feel more comfortable having the slightly better UI. But yeah, I'd rather just use Trader Workstation. Trader Workstation's like ugly as shit, but it's pretty robust. Like there's a lot of stuff you can do with it. Tesla dead? Tesla will probably run. If Jamie doesn't run Monday morning, good time to sell CSPs. I mean, IV's kind of low right now. That's not great. It's not a bad time to sell CSPs. Short dated though. If you're selling CSPs into like what you think is an Opex run, you don't want long dated ones because the price will fall and it makes them hard to get out of. How does Carvana look to you right now? I mean, pretty good. I have December calls for it. I bought some more on Friday. I'm okay with this. I mean, it fell just a little bit below my risk. So I added some more Friday. But I'm still in it. I'm still targeting the same range. None of my expectations have really changed. I just think some shorts need to cover. It's not like a huge play, right? But it's probably pretty easy money. Calls aren't too expensive out of the money either. Does WeBull offer free L2 data for options? Probably. Like the bid ask on options? I think so. I think it offers the order book. It's free for like 3 months. And then after that, you have to pay like it's really cheap. Like real-time options data and L2 are almost I think they're only like $5 a month or something. They're pretty cheap on Webull. And they give it to you free all the time. Like they're constantly giving away free like L2 data. Definitely not over leveraged, but what if Jimmy doesn't hit $60 on Tuesday? Seems like loading Fubo and writing CCs is more reliable, but 123 Upstart has more explosive upside. Probably. How about selling in the money CSP on Upstart, buying calls near the money with some part of the profits? Okay. That's just a synthetic long. I mean, but yeah, it's a synthetic long. The risk there is that you get assigned on the in the money CSP. Jimmy might run Monday morning. Has that ever happened on an Opex? I mean, yeah, last November. It's rare, but it's possible. For Carvana, you sticking to 1216 or also getting some Jan? If it starts to move, I might pick up a couple Januaries, but probably not. Just 1216 is fine. If nothing happens in the next few days, I'm probably going to cut them. I never come to the live stream, but wanted to wish you happy birthday, man. Thanks, Justin. Thank you for the life-changing education you provided for us and the insanely long hours you put in. I appreciate it, dude. Seem to have a free options order book on TDA. I'm not sure why. It might be part of. It depends on how much. Like, some brokers, it depends on how much you trade, and you get like more free data. If Upstart runs like GME in 2021, what would you buy with the profits, and why a personal chef? I probably wouldn't buy a personal chef. That would weird me out. I have like people that come in and clean my apartment like every couple months to like deep clean it, just because I don't have time to like break out all the cleaning stuff and really go at it. So like I keep everything like clean, but I need someone to like come in and like clean all the grout and just like get everything really spick and span. And I hate that. I always overtip the shit out of them. I feel super bad. And I realize it's their job and they're employed to do it, but I'm not good at having people work for me. At least not tasks like that. I'm fine if it's like they're doing their job. Well, I don't know. It's just weird. It's weird for me to hire help. So the topish part of the round as it comes down, how would you play far dated puts? In the money, so extrinsic value is minimized. Add the money or out of the money. In the money, far dated. Like you want like 90 DTE in the money puts is the best. It's the best way to profit on the downside with puts. Obviously, naked calls are just better because you get to sell the IV instead of watching the IV plummet. So I'm gonna sell $30 2024 leaps on my entire GME position if we run hard. I plan to buy back when the market crashes. Can you go over some of the cons of doing this? I mean, you're taking a loan against your shares. And the con would be that the price doesn't go below 30, right? Till 2024. But yeah, it's an option, right? You can sell deep in the money calls, you know, for a long enough period. And just you're essentially taking like an interest-free loan against your shares. And at some point in the future, if your shares fall, like the price of the stock falls below your strike, you know, you can buy them back and then you've profited. So it's an interest-free loan that at some point you might be able to pay back for less than you initially got. Drop in the price reduces the principal. Happy birthday, Gurik. What is the overall strategy for repositioning after Gamma Max is reached? Generally I sell a lot of naked calls and covered calls. I just wait. Like sometimes I'll buy some like puts, but usually not very many. It's just they're just not that profitable. Like I'd rather blow my margin on fucking naked calls, but not everyone has that option. I understand. Your house smells like fabulous. It's so worth it. I guess. Have you read my DD? It's just a TLDR of JFresh's DD. I haven't, but link me it and I will. Call spreads for the poors. Yeah, you can use call spreads. Bear call spreads. I mean, I have to. I'll be honest. At the Opex peaks, I have to spend most of my time finding strikes where I can sell covered calls, and I won't just crush the spread. If I'm going to be completely honest, because I have to sell like over 1,600 covered calls, and it's not easy to do. It takes a little bit of time, and by the time I'm done doing that, there's usually not a lot of like put buying opportunity left. I will say that if we run above 45, I'm probably gonna sell $32 calls for like next Jan or maybe next June on most of my GME position. Because I do think the market's going to take a downturn between now and then, and I don't expect even with positive EPS, I don't think GME is going to hit a $45 valuation that fast. I kind of feel like this Opex GME runs really hard. RC will release shares. Just look at him. He hyped up RSS, so he's ready to make some brand new bag holders. I mean, it's only a matter of time. I mean, they are gonna need I mean, they're reducing costs, but I don't know if they're reducing them fast enough to avoid another equity offer. I think we're bound to see one in the next 4 quarters. It may not be now, but in the next 4 quarters we could see it. I did what Watkins did with my GME position, except I did it for way over my cost basis, and for Jan 2025s, I built my Opex position with it, and honestly, it was pretty great. It was well worth it. Yeah, it's a way to hold on to something through a downturn in the economy. Although, obviously, it doesn't always work out that well. Sometimes in those situations, you would have been better off selling. I just want to keep my long-term shareholding, and I also think GME will probably do pretty well over the coming like next 2 to 3 years. So I'm kind of okay with holding it into a recession. Most things I'm not. Does the Ivy during a run make a CSP more profitable? Yes. But no, because you'll be further out of the money. It makes them more profitable because IV goes up, but it's still less profitable because well, your chance of assignment is lower and you're selling further out of the money because the price has gone up, right? So if you're selling $20 CSPs when we're at $20 or $22, right? Like say you were selling $20 CSPs here, they're worth a lot. They're worth quite a lot because they're so close to the money, right? But if we run up to like 38, right, and you're selling $20 CSPs, they're not like the IV is going to go up, but the intrinsic value is almost gone, right? Unless you want to enter a position at like 35, which is terrible. Jan 24 in the money calls, probably like enough to get my cost basis to 0. So 35 or 32. 30, well, depending on how much. So my cost basis right now on my shares is 6 and change. I haven't done the math on it for like 30 days or so, but I think it's like 670 something a share. So yeah, I'd want to sell them at least that far in the money and get my cost basis to 0. If we run really hard, obviously more in the money, but I'll probably be targeting like the 3250 range for my strike, depending on how many I can sell at that strike without blowing up the spread. Selling calls is way more profitable than buying calls after a fat Opex run. Yes. Wouldn't it be more profitable to continue wheeling? Yeah, it could be. It depends on how hard we run, like I said. If I'm right, then I can buy them back before the next Opex for a significant profit, right? They'll still lose their intrinsic value. No, I don't think the IV bump's gonna negate the loss of intrinsic value. It'll help, but it's not gonna negate it. What are conservative estimates for Upstart increase in IV for both December and Jan expiry? We run to 25 versus 30, 35, 40 by Wednesday. It seems it's currently at 150 and 170 respectively. It's quite high. It's already almost higher than it's been all year. I mean, it can just rocket, right? 200, 300, 400%. It depends. I mean, it depends on how hard we run, how much volume there is. I don't think generally Opexes lead to like 40 to 60% bump in implied volatility, but we've already seen a 50% bump in implied volatility on Upstart before Opex even happened, right? So it could move up quite a bit. Assuming Opex run, is it not optimal to sell in the money CCs 30 days out? Why would you potentially sell CCs 5 to 6 months out? Because I get an upfront. I get to capture that move upfront in cash, and I get to deploy that capital elsewhere where I think it'll be used more efficiently. It depends. Like I said, it depends on how hard it runs. If we hit like 38, I'm just gonna sell like 20 or 30 DTE, but probably not. I'll probably just sell pre-earnings covered calls in the money. But we're also likely, if we run really hard, we're also likely facing down 3 months of downtrend on GME, right? So wouldn't I want to be like getting as much out of that as I feasibly can and lowering my risk of assignment by having further dated expirations? See, Stefan, your problem is you think there's an answer to everything and it's always the same answer. Like there's a best answer to a situation and there isn't. You need to be flexible in your approach to the market. There is no best answer for any scenario. It is always a variable. What's your favorite Doritos flavor? I like the spicy purple ones. I don't really like Doritos very much, but Cool Ranch? Cool Ranch. Do you think they can drop IV much from Opex to earnings? I'm sure the price will, but eventually they'll have to stagnate us in a range for a while. Yeah, probably. IV will crush pretty fast once people start selling out of calls, though. I think people are forgetting that we're expecting RC to release shares at anything above 50. We should be, yeah. Well, yeah, we should be. We still don't have a GME earnings date, do we? No, we don't. Hopefully we hear about it in the next couple days. Before the holiday, at least. That'll give us a much better idea of the optimal expirations for covered calls. So let me try to explain this. So if I go and sell like GME at roughly the same IV, like GME Jan 24s, $5 in the money, right? That's $10 a premium per 100 shares, which nets me $4 a share profit for my 160 odd thousand shares. And then I can take that money and use it to leverage things that are far more profitable than GME. Like I can take all that capital and use it to buy like out of the money puts on SPX, right? GME's got like a 3% yield a week, but if the market starts tanking, and I have out of the money leap puts on SPX, I could be making, 30% a day as the price declines in the market. So it's just where you have your capital deployed. And then, when after the market's done declining, I can then use all the profits and buy back the covered calls. Right. And so it's a very beneficial setup. I think I might have some Upstart Gen 20C that have the option to sell more CCs against them. Okay. You can sell CCs against the leaps if they're in the money. It's PMCCs. It was pretty good. So if Upstart stays on reg show during Opex, we should prepare for a squeeze in December. In December Opex, would it matter if Upstart goes off reg show anytime before December? Yeah, it would. In IBKR, you said you set up an auto close for a position of 20% drop in a short period of time, say 10 minutes. Is that a standard feature, an algo you built, found? It was an algo I had built for me. It just it monitors my positions and my portfolio on IBKR, and if anything drops, and it's actually it's variable. It's not just 20% in 10 minutes, but if it loses like 7% of its value, I think over like 5 candles, like 5 1 minute candles, then it automatically closes the position. Sometimes I don't turn it on for certain positions. I have like a little checkbox, and you can select which stocks you have it turned on for and which stocks you have it turned off for. It helps keep you from getting rug pulled. Uh, Discord seems to be a bit confused on how Opex works. Can you go over why volume is the main indicator of a real Opex, and why a low volume run is possible but not? Well, low volume is possible because there can just be a small amount of covering from the market maker without covering from the ETF. But yeah, high volume is what you're looking for, because OPEX, like a real OPEX, should be a stacking of obligations. Like every monthly OPEX has some blowout from the market maker, and that can lead to like 10% or 13% runs on kind of low volume, but ultimately a NOPEX, right? A real OPEX has large forward contract cash covering by ETFs that starts to accelerate price action, which further exposes the market maker to gamma, which starts to put more and more calls in the money. All of this shit generates tons of volume. And so a real OPEX run has a lot of volume. Lots and lots of volume. Far in excess of our like rolling average. I like looking at like an interest-free loan against shares. Easier to understand. Yeah, I mean that's what it is, right? Hey Girk, you once said that the current fair value of GME is around 25.30. Assuming they post slightly positive EPS next earnings, how would your opinion change on their fair value? Thanks. I could see it move up. Fair book value on Genie is about 17. I don't think I ever said it was 25.30. I mean, that's where the market's valuing it. I'm pretty sure the last time I spoke on this, I said 20 to 23. But Jimmy isn't trading at a multiplier. With the EPS bump and like positive EPS, we might start seeing Jimmy trade at a multiplier. In which case, it could start trading between like 30 and 40. But with the volatility shorts, I don't think we're going to realize that price improvement anytime soon. This OPEX, I can only play options. Can you please point which options are the best to buy? Buy in the money or near the money? On a pullback for December 2nd expiration or farther dated? Thanks. I mean, so you're just trying to scalp it? Verax? I saw your Ko-Fi. I read it. Relax, Walken. I'm now a lender approved I'm now lender approved on IBKR. I believe I can still sell CCs, right? Nah, it's if not, it's pointless. Yeah, you should be able to sell CCs even if you're lending out your shares. I double check, call them, but yeah, if not, it's kind of pointless. If I plan to buy back a CC, what is the difference in the profit between selling the same in the money strike at 30 DTE and a leap? You'll realize more theta decay in the profitability on a 30 DTE than you would a leap. Yeah, so more profit near term. Do you know what the last run to GME run to 35 was about? Yeah, I explained that. Did you watch the XRT video? Those are XRT's FTDs. Those runs like May 11th or May 12th, March 8th, January 7th. Those are XRT's FTDs because they're offset due to reg show. Yeah, no problem. hard to pin down when they're due because of Reg Show. I'll be honest. Is it possible if shorts try to close a position on a very illiquid stock, they simply can't get enough shares, so the position, the stock price just stagnates until somebody sells? No. The price would go up until somebody sells. That's how you find sellers. There's two places to find liquidity, right? Bring the price down or bring it up. If they're looking for liquidity, they're going to raise the price. I still think we're at least 2 quarters away from positive EPS, and that's without a market crash. I agree. I agree that 2 quarters is a much better timeline, but they could surprise us. If they match their reduction in SG&A from last quarter, we could see positive EPS. I will say that it's more likely that we see it in Q4. The question is, are we going to sustain positive EPS, which we may not. Timeline to DCA into longer term SPX puts. Wait a few weeks, see if we hit 4100. Yeah, there's a bunch of shit I want to buy puts on, or more puts on. Like Nvidia, SPX. There's like I want to buy more puts on Tesla. I want to buy puts on Microsoft. There's a lot of shit I want to buy puts on, but I am still trying to be as patient as I can because I can get those positions a lot cheaper, I think, over the next few weeks. Wouldn't they stop raising the price at some point and are willing to pay more? They're not one entity. Someone else will come in and raise the fucking price. They'll just keep raising prices. That's how shorts getting out works. That's why short squeezes happen when they do, which they theoretically don't anymore. But that's supply and demand. Have you read none of the reading materials? I don't know if it's scalping, but I can't play shares. I can only buy calls. I don't want to take the most advantage. My time frame is only for Opex, nothing else. We'll cut ASAP if no VWAPs. I mean, carrying even December 2nd's overnight's gonna cut a lot of. I mean, you're talking like $20 or 20 cents a premium a day on December 2nd calls. Probably. What's the theta on those? See, 7 cents a day right now. But with this week, once the holiday and everything are shaved off, there'll probably be more. They're kind of dangerous to carry 3 days. I guess you could. I don't love it, but it's a bull case for GME at this valuation. If they aren't going to grow revenues, remember you said you didn't think they would recently? I mean, I expect them to do. They need more money, first of all, and they need to expand in other avenues and increase their margins. That's going to take time. It's going to take another growth cycle. The current goal I think for GME is to hit their 2-year turnaround. So we're still in business. We're making money. We did it in 2 years. We turned the company around. It's stable, right? And then from that point of stability, you're going to see them start to move into another growth cycle where they release more shares, get more equity, or give out more equity to get more capital, and then they're going to reinvest that money into another growth cycle. On a good run, how hard do you see IV spiking on Upstart versus where it is currently? I mean, most Opex runs are 40 to 60% walk-in. So anything beyond that, I don't know. It could happen. Intraday volatility can spike 100, 150%. It's up to the market maker. It depends on how much risk is on them at any given time. And then the IV30 at the end of the day is just dependent on where that implied volatility closes at the end of the day. Generally, intraday IV moves up higher than end of day, like where IV is reported at end of day. No, they don't have the option to just say no. First of all, most of the covering we expect isn't from shorts. The covering we expect is from synthetic obligations that were created, and no, they have to cover them. They have to cash settle them. They're out of time, right? That's the point. If that covering causes shorts to cover, then you start to run into like rats off a sinking ship type of situation, Bruce. PTSD from Opex has me worried. Is this a 50-50 or a 70-30? I think it looks really good. I'm not going to give you fucking odds. It looks good. Liquidity's really low. We have plenty of synthetic obligations built up over the period. There were lots of put closures. We're already seeing IV climbing, regardless of price action. I don't know what else you want. Like, everything's there. It either happens or it doesn't, right? This is Opex. You want to play them? They're high risk. You buy calls, you see what happens. If you don't like what you see, sell the calls. I mean, it's a very small window of exposure that we've narrowed it down to. The potential for losses is really just dependent on how much leverage you have, right? They say to diversify investments. So smaller capital, 10K, do you think it's better to take high risk on an informed play? It's better to scalp or slowly build up your port through, you know, like wheeling small stocks or selling CSPs. People being bullish is irrelevant. How retail feels about a stock has zero influence on what happens with it. There's no such thing as too bullish or too bearish. That's just bullshit. Like, we talk about it, it's fun, but no one fucking cares about the million or $3 million of capital the fucking pickle jar is throwing around. It's in the scheme of things, it's fucking nothing. It's pennies. It's your sentiment. All that really matters is what big money needs to do. They don't give a shit how bullish we are. The market maker might. Like, the market maker might burn up our weeklies for fun, you know, because they can make a bunch of money off of us. By, like, you know, down pricing the IV like they did in June. Stuff like that, but what are we fighting about? I want to help make people mad. People are just being wishy-washy. And they're like, ah, shit, I'm over leveraged because I got way too bullish and now I want to be bearish. Scalping is in 0 DT SPY SPX with large percentages of your port, 50 to 75. Or more. You shouldn't be playing SPY or SPX if you have a $10,000 port. You shouldn't, not at all. You can't effectively average down. You can't manage your positions. It's super fucking risky. Maybe, or not what, SPX. SPY, okay. It's expensive. You get caught only playing 0 DTs, but it's better, I guess. You can just scalp runners. I put 500 on this Opex play. Don't underestimate my power. Is that it? Figured you'd be far further into it than that. I just stay bullish on downs or ups when it makes sense. I hope everyone's had their anxiety assuaged. Here's the deal. If you can't afford options, you probably shouldn't be playing them. If you can't afford 3 days of exposure on a stock, then you probably shouldn't play Opex. And if you lose all your money, you can always get a job. So As for me, I'm bullish as fuck. I can't wait. All right, guys. I've already gone 20 minutes over trying to make everyone feel better. Manage your positions. Take profits when they're available. Do the right things. You've had enough Nopexes. You should play a real Opex perfectly. Or a Nopex. Either way, you know how to manage it, right? Thank you guys so much. I'll see you bright and early tomorrow morning. Have a good one, guys. Sleep tight.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must have...
Must have what?
Look, Dad, it's
Where
not...
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.